Okay, we're going to do a recap here for the week ending April 2nd, 2010, trading with the quick view using Forex University strategies. Let's get us started here. We'll take a look at overall what we were doing here. As you can see here, on the beginning of the week, we started out a little rocky there. It looked a little rocky. We're looking at the second week ending of April the 2nd, okay? Had a bad day on Monday. But that's okay. I mean, you know, it happens. Then Tuesday we rebounded very well. Middle of the week, a little mundane. We only had 2 entries that filled, but at least they were for profits. Thursday was a good day. We pretty much scalped most of the day. That's the SLP stuff. SLP stands for scalp. S, of course, as you know, is a short. And we scalped these to the long side, scalped this to the long side. This, I know you can't really read that very clearly. Basically what that was, it was a scalp to the long side. The first time we tried it, it failed us. It cost us 35 pips. The second time we came back in, it gave us 75 pips, leaving us with 36 pips. And we ended the week, which was Good Friday, by the way. Very, very low volume. And a lot of no entries. And we had 2 entries here with the Aussie and the yen. We finished out the week, I believe, with about 800 and something. And let's go over to the total. Yeah, 804 was the total pips for the week. Now that's the recap. Let's go into and just try and touch on a few of the major key areas here. For example, we're going to look at what went wrong on Monday. And we'll skip over Wednesday. We'll skip over Friday. And look at Tuesday and Thursday. Okay, well, let's start out here with the Aussie. As anyone can see, as you'll find quickly, we were just simply on the wrong side of the trades for Monday. It was plain and simple. Plain and simple. Look at this. Here is 1, 2, 3, 4, 5th day, a Fibonacci day of the short trend. We should have expected to see some type of reversal going long. Instead, we went with the move to the downside, looked at this first resistance at the bottom of a channel, and got wiped out. Also, besides the change there with the expectation with that Fibonacci day, it was the day after a squeeze that went to the downside. We should have expected it to come back up. We just weren't looking. We got caught with our pants down on the wrong side of the trade with the Aussie. I'm not going to make excuses, even though I might have mentioned in another video about being distracted that day, but that's no excuse. Now, what should I have done? Where should the trade have been? Actually, I wouldn't have been filled if I technically went to the right trade to go long, which would have been, looking here, 9043 was already there. 9044 is where it opened. We could have, okay? You could have, but technically speaking, in all honesty, even without the condition, just technically speaking, a double dare. Let me see, is a double dare in order? No, it's not in order because there's no transitional state going on. But, you know, if you wanted to be aggressive or being conservative, you would have been trying to take along at 89.72. Or another aggressive move would have been to deduct the pivot and go at from the pivot, subtract 14 or 15 pips or so, go long around 90, 20, 25 or something like that. Still would not have filled. It just simply took off to the upside from the open. And again, problem with the euro. We actually caught some pips on the euro. That was okay. The pound was on the wrong side of the trade. What should we have done in terms of going long? Where should the long have been? Opening up with a big gap at 49.55. Well, the best thing would have been to go for the move either here at the the close, 48.95 plus your spread, of course, would have filled. We would have had a really nice day going long. or you could have tried to reach for the top at 49.24. You still would have had a fairly nice day on the pound. On the Kiwi, trying to well, let me back up at the pound again, just give you the reasonings here for going long for that day. 1, 2, 3, 4, 5 Fibonacci sequence in there. There's a narrow range and a squeeze. We've already popped over the top of 49.24. Well, with the gap, well, going long at 149.24 would have been the move to make in terms of going long. We did not do that. On the Kiwi, the proper entry, let's see, 1, 2, 3, 4, 5. They're all right there in sync, and it's squeezing. We could have taken a long over the top, or do we have support and resistance areas? 7064 is the Lone Ranger, which we shorted. For support, it did not really gap or anything like that, so the consolidation area 7030, we would have missed that, but at least we would not have been losing money. On the Canadian dollar, 1, 2, 3, everything is in sync here. I mean, come on. Day after the squeeze that went up, we should expect it down. Same scenario, you're going to see this all the way across the board no matter what we do, so there's no sense in going any further. I think I've made my point. Going into the next day, we get transition signals on all of our pairs that just made that move after the 5th Fibonacci day all the way across the board. And so therefore what we did was we played both sides on a few of them and did very well by doing so. The reason being is with that transitional move, you know, there may be some ping-ponging, which we might have expected. Also realizing that transitioning out of the shorting position on the pairs, that US dollar was not the base pair, and shorts were in order, with the exception of the yen. And even with the CAD, we went long, made 32 pips. Let's look at that real quick. Here's the reason for doing that. We have a reversal day. A reversal day in the squeeze, which is a signal that we might flip the script, because we reversed on this move here of down, up, down, reversal, tweezer, top. So we didn't want to get too far past our bottom, and we were in an uptrend, and this transitional move made room for a double dare long, which we didn't really take per se by looking at this, because our entry on that day was at 101.60. Oh, that's the CAD. I'm sorry. I mean 105.93 was long, and then short at 106.74. 105.93 did fill, which is right there at the bottom. We're looking at 105.93, which is this plus the spread at the consolidation. But the CAD, we reversed and went long, period. We didn't go into any kind of move to try and go. Why? Because it wasn't transition, it was remaining long signal. Okay, that signal remained long, so it was the defiant pair. Okay, let's count the 1, 2, 3, 4, 5, and now 6. It survived the transition, not transition, I'm sorry, but the reversal for the Fibonacci day, and we expect it to see it to continue. Now, the market lost 14 pips, but we gained 32. Why? Because we have the quick view giving us the numbers for support and resistance, and we used them. 101.59 adding the spread. That's why we got the long at 101.64. I hope you got a lesson out of that. Because of the time limits, I try and keep these as short as possible. I've talked long enough. Hopefully you've got the lesson out of what happened this week. I have other videos that deal with things that happened this week, such as April Fools and so forth. So hopefully this is giving you a little bit more insight into our recap for the week ending of April the 2nd, 2010.